Okay, hello, welcome everyone. Glad to see some familiar faces here. My name is Christopher Aaron, founder of iGold Advisor and Elite Private Placements. We're going to talk about the most important market in the world for 2025. I'm not joking about that. Before we do that, I want to do a little blast from the past because we're going to start talking about a few esoteric type topics here in a few moments. I'll be talking about Mars and some other things. And before I do that, I want to assure you that I have my feet planted on planet Earth here. I have not smoked anything while preparing this presentation. This is a screenshot from my talk here at VRIC in 2023. Gold had just recovered above that breakdown. See that red false breakdown there at the bottom, above $1,680 per ounce. It recovered, and 1 month later was my talk here at VRIC. Based on that data point alone, I calculated a target for gold of $2,535 in 2024. So it was almost $1,000 less than that, but notice that I said it was not going to break out on point number 3. It was going to back off one more time and then break out on point number 4. Here's what ended up happening. Notice it did not break out on point number 3. It broke out point number 4. We've achieved the target. So when we get into some of the esoteric topics here in a moment, every once in a while I get something right. That's all I'm trying to say. The most important market in the world for 2025, and really this is going to be for the next 1 to 2 decades following this point in time. What is it? We are talking about the Dow Jones Industrial Average, but not priced in US dollars, as most people look at it. Instead, priced in gold. Okay, so what am I talking about? First of all, why should you care about this? Who cares about the Dow priced in gold? Well, look at gold for the last 5 years, and then look at the gold miners. What is going on here? Why are the gold miners down 15% when gold itself is higher by 36%? What is going on here? And then if we fast forward to the junior miners, I mean, like, these companies are digging for gold. Gold is higher. Is this like an inverse ETF or something? The junior gold miners? What the heck is going on? So this is why you should care, because if you're investing in gold, take a look at the Dow Jones Industrial Average and take a look at gold over the last 10 years. How close do those lines come to one another as a net sum? 10 years. This is not like a minute-by-minute chart. So 10 years, we have this extremely high correlation. It's about an 85% positive correlation between the 5,000-year store of wealth and then the longest dated stock index in the Western Hemisphere of the largest economy in the world. I mean, what the heck? What is going on that these things are being functionally treated as the same market by the sum of investors? Let's zoom it in here and look at the last 5 years. Look at this correlation. It's even tighter over 5 years. Zoom it into 2 years. My goodness. Dow Jones and gold. I mean, it's the same thing. You can trade one versus the other. I do this often in my own personal accounts, going long or short, playing this arbitrage opportunity. It's not going to last forever. Now, some people may be asking, well, is this starting to diverge? Do we see this divergence starting to develop here? Let's rewind back to the 10-year perspective and notice with me a few of these times that this divergence had happened over the last 10 years, but sure enough, as a net sum, where are we? I mean, within 4% or so of one another on the 10-year perspective. So no, the divergence has not started yet. This is still very active. I'm seeing it on a day-to-day basis, the Dow trading with gold. The takeaway is that the market is functionally, I say functionally, I might disagree. I might say that a basket of stocks, the 30 largest stocks in the United States, are not the same as physical gold. That might be my thought, my belief. It might also be your belief. But the market disagrees with you. The market has another opinion. Ignore the market at your own discretion. Has this ever happened before, this type of extremely tight correlation between the Dow Jones and gold? We're looking at the Dow to gold ratio. That's the same ratio. That's it. That's all of the available history. This goes back to 1970 when gold finally broke the standard against the US dollar. So this is it. There's no more data to refer to. I'm not cherry picking anything here. Look at this. So look at how in the 1970s, as the price of gold itself rose by 2,400%, the Dow to gold ratio lost 96% of its value. So can you imagine that in 10 years, Dow companies lost 96% of their value as priced in gold? That's how big that differential was in a bull market in gold in the 1970s. Fast forward to the 2000s bull market. I'm sure a lot of investors here participated. This is when I started to participate in the precious metals markets, like 2007, 2008. Gold higher by 650%. The Dow is priced in that gold down by 85%. That's a big drop. That's a huge drop for the Dow. Look at the present cycle, up 160% for the price of gold. This is no slouch type of move that we've seen here for gold. Look at the Dow to gold ratio, completely flat, 100% flat. This is like back to elementary school. Can we recognize the one that stands out here? You know, the one that doesn't belong, the one that's different from the rest. So to answer the question, has this happened before? No, not once, ever. This is the first time in all of recorded history in freely traded gold that we have the Dow to gold ratio moving sideways as both gold and the Dow rise in value. Let's talk about why this is happening. There are two very important set of fundamentals that are occurring right now in the world, both of which are true at the same time. Most investors are conditioned to, especially precious metals investors, are sort of in the camp that fiat currency and debt are the biggest problems that we have going on in the world, and they are big problems. They may end up being the biggest problems, but the jury is still out. So here on the left we have, I think this summarizes it perfectly. This is debt to GDP of the United States government, and notice, if you will, the spike for World War II, and that currently the United States has more debt than it did at the end of the largest global conflict in the history of humankind. The only difference is we didn't defeat the Nazi power here over the last 7 years. What did we do? But that's how high the debt is. So we are living through something insane with debt levels. Those investors are expressing their opinion by purchasing physical gold. And I'll tell you, it's not most small investors in the United States or in the West. It's large, it's sovereign wealth funds, it's institutions who understand what's going on. I work with investors from around the world. The level of interest amongst individuals is lower now than it was 15 years ago when the price of gold was only $1,000 per ounce. So this is coming from high-powered money, and they're expressing it by buying gold. Now, at the exact same time that this is happening, there is a completely different set of fundamentals that is occurring in the world. For the first time in human history, we have the sum of human knowledge at our fingertips and entering our brains every day. I want to give a little anecdote of my own life. I was with the military. I was in Afghanistan and Iraq 2006, 2009. When I got home in 2009, I was very ill. And I was ill for a number of years. Were it not for the information, the medical advances, and the access to technology that I received 2009, 2010, I would not be standing here today. That's how bad I was as we got past the second deployment that I did. And so from my own personal life, I saw the advances that were happening in medicine, in technology, in information. We can talk about some of the other things that are going on right now, AI, robotics. And if Elon Musk is anywhere near being right, we're sending human beings to Mars within the next 4 years. So there's that Mars comment. Remember, my feet are right here on planet Earth, but I'm trying to interpret the charts for you that show that the Dow and the gold are being treated as the same asset class by the market over the last 10 years. Why is this happening? Even if it's not 4 years from now when we get to Mars, if it's 10 years from now, the analogy that I would give is like this is 10 years before the Pilgrims left England to sail to the New World, or 20 years before. And you're telling me they can fully discount what they were going to discover when they settled in North America? They had no idea what they were going to find. They had no idea the new technologies and advances that were going to be developed through settling the New World. We are, as a species, we are at that precipice right now on a whole nother level. And we have more debt than we've ever had before. So both of these things are true at the same time. And these individuals who see the other side of what's going on are expressing it through the Dow Jones. So, who's correct? Let's go back to the charts. This is what I do. I like to focus on the charts. I mean, the fundamentals that we just talked about are what are driving the charts, but this is what's actually happening. This correlation, both are correct at the same time, but this is not going to last forever. Let's take one quick look here at the last time that gold found itself in such a correlation with another asset class. This time it was gold and the Japanese yen. Look at this correlation. People think gold is superior to a fiat currency. I mean, Japan is an island nation that lost World War II and has been in deflation for the last 30 years and trying to combat that by printing money at every opportunity. Why was gold trading in lockstep with the Japanese yen for almost a decade before this point? Many reasons, infinite reasons, in fact. But the bottom line is this is what the market believed. Not only am I talking about this, look at all the articles that were being printed at the time. Why the Japanese yen mirrors gold's performance. Are gold and the Japanese yen equal? Everyone believed this. Don't blink. Let's fast forward the chart by just a couple years. Boom. Look at that. So, the famous economist Herbert Stein in the 1960s said that which cannot continue forever will one day stop. I mean, it sounds really basic, but it's basically an extremely true way to think about these correlations between diverse asset classes that come and go throughout the years. By the way, what finally caused the divergence between gold and the Japanese yen? It was when the Japanese central bank in 2018 finally came out and said, it's not enough to print money and give to everyone and bail out institutions. We're going to print enough money to suppress the yield on the 10-year Japanese government bond. And when they did that, the market said, enough is enough. We're selling the yen. We're buying gold. The rest is history. So, back to the Dow to gold ratio. Mr. Stein, can you help us again? That which cannot continue forever will one day stop. When is it going to stop? I'll answer that at the very end, because this is going to decide the fate of 80% of the companies that are presenting at this conference and the fate of every single investor sitting in this room. Whether you choose to follow this with me on your own, totally fine. I produce free videos, free content that goes out there. We also have some subscription services. But either way, I just want you to follow this. Key takeaways. Whichever way this ratio breaks is going to determine all of our fates. This is a battle between these unsustainable debt levels and the next leap in progress for our species. We are all experiencing the leap in progress right now. It's just if we've been conditioned to be gold bugs only, and remember, gold bugs have half the story correct, but if we're going to be gold bugs only, we are not looking at what else is happening in the world. This is the battle. The market, and so it's not only myself, it's not only you that might be saying which way is this going to resolve, which is more powerful. The sum of human knowledge does not know which way this is going to break. Otherwise, that chart would be diverging again. By this point, it's not. This is the only time that this has happened. So we have no precedent for analyzing how the world is going to respond if gold breaks out or if the Dow breaks out. But it's going to be dramatic one way or another. What do you do if you're looking at this with me and you're saying, okay, I think we need to acknowledge both sets of facts? You own both. Right now, you own both. This is what I'm doing personally, and I'm trying to move a lot of my subscription base in this kind of way. There's a little bit of resistance amongst gold and commodities investors to start thinking outside those paradigms. Apparently, some people respect my independent perspective on the markets, and all I'm doing is sharing with you what's happening in the world and what I see on the charts. You can take it or leave it. Right now, you own both. You own a precious metals portfolio, commodities portfolio. You should have a core of physical bullion. And then I like either the growing or the undervalued existing resource companies, known resources, defined resources in the ground. I did a talk yesterday, a panel talking about specific companies that I like. You can watch that online if you missed it. These are companies that have defined resources in the ground. They're trading for dollars per ounce of gold in the ground when gold above ground is at 2,700. This is the precious metals portfolio, and you start building an industrial and technological portfolio. It can include some commodities. It can include energy and industrial related commodities. These are going to be needed by the growth of civilization. But here's where we have to really start thinking outside the box. We've got to start thinking about artificial intelligence, nanotechnology, medical technology, and even exploring other planets over the coming generation or so. Follow this now, religiously, every single week. I'm telling you, when this thing breaks, it is going to break impulsively. The same way that gold and the Japanese yen diverged a few years ago. This is going to break impulsively, and it's going to leave investors in the dust if you're not aware of it when it's happening. It's going to be so powerful. That's how these ratios break when we study them throughout history. Do not attempt to be smarter than the market. I'm not. The entire core of my business is focused around aligning with the market, observing the trends in the market and saying that's what I'm going to do. I'm not going to argue with the market. Don't get married to one conclusion here prematurely, and be prepared to align the majority of your portfolio as an investor with whichever one of these is the victor into the 2030s. Last chart, we're looking at the exact same thing, the Dow Jones versus gold, this time not on the same scale, this time as a ratio. And can you see how this thing is converging? This is like a generational convergence on the charts. I mean, this is powerful. So the way that you observe this is you follow a chart like this. These pennant consolidations, this is a pattern that we observe in human nature throughout history. These pennant consolidations, it looks like a big triangle. These things break eventually. They do not go forever. You can see this pattern must break by 2027. You wait for the initial break of the pattern to occur. Higher is in favor of Dow and technology. Lower is in favor of gold and precious metals. When this thing breaks, you align the majority of your capital with the victor side of this ratio, because that initial break will be just the prelude to a decade or so of outperformance. That's how these ratios break when they finally do. They are not subtle. They are not short in duration. We're talking a decade to a multi-decade of outperformance here for the victor. This is what I'm going to be doing with my own capital. This is what I'm going to be doing with our firm's capital following this. Right now, I own some precious metals, and I own some technology. It's the most important market for 2025 and going forward. Something to think about. Thank you.